If you're thinking about buying an investment property, you probably face this big question. Where do I even start? Should you jump straight into researching suburbs first? Or should you run the numbers first based on your goals and budget? Jumping into suburb research sounds exciting, but without knowing your borrowing power, cash flow, or targets, you risk spending hours chasing properties that don't fit your strategy. Running the numbers first gives you clarity. So in this 10-minute video, I'll show you how to run your numbers before you begin your suburb research, so you know exactly what price point, yield, cash flow, and growth you need. So when you do research suburbs later, it's focused and purpose-driven. And don't worry, running the numbers first doesn't cause analysis paralysis. It's actually the opposite. It simplifies your choices and gives you a clear action path. Without the plan, many investors end up overthinking, second-guessing themselves, and getting stuck, never making a move. That's the real danger of analysis paralysis. And hey, stick around till the end because I'll show you a bonus tip that will save you even more time by helping you instantly find matching suburbs after running your numbers. This is where the SuburbsFinder's Property Analyzer tool comes in. It helps you run the numbers first, clearly and confidently, so you can invest smarter, research more efficiently, and avoid getting stuck. But before we dive in, please remember this is not a financial advice. It is a guide designed to support your property research and planning, and it should be discussed with a licensed financial advisor before you make any investment decisions. Start by logging into SuburbsFinder and opening the Property Analyzer. Select whether it's a house or unit and type in a property address. Just pop in any real address. That way, the tool can auto-calculate stamp duty and fill the key fields for you. Key data, including median property price and median rent, are automatically pulled based on the area and number of bedrooms you're analyzing. The vacancy rate is also populated based on the area overall. Plus, stamp duty is automatically calculated based on the state where the property is located. Next, you can input your purchase price, deposit, loan term, and select either principal and interest or interest-only repayments. The analyzer also estimates when your property might double in value based on the area's historical 10-year compounded annual growth rate or CAGR. Of course, remember, past performance isn't a guarantee of future results, but the historical CAGR gives you a realistic benchmark to plan around. You can adjust your deposit amount, stamp duty, solicitor fees, and expected rent increase, either applying a general growth rate across years or customizing it year by year. Input your taxable income and ownership split to instantly calculate after-tax cash flow over the loan period. And if you prefer visuals such as graph, just click Show Chart. It shows you your loan balance, property value, growth, and usable equity building year by year. Want to fast-track your mortgage payoff? You can simulate extra repayments and instantly see how many years you could shave off your loan term. Inside SuburbsFinder, you can also browse properties for sale and instantly analyze them. In the main navigation, under Listings, I'll click on Houses. And I'll tap in Dufton in Melbourne. Just click Analyze on any listing, and all the key figures will be pulled straight into the Property Analyzer. By the way, Dufton is in my previous video. as one of the 8 best Melbourne suburbs to invest for under $750,000 in 2025. So please check it out. I've included the link to that video in the description below. So going back to the Dobton property that we clicked on, the property analyzer pulled the address and the advertised price. So we have all here assumptions and variables, and we click on show charts. Now we can see what would be the approximate interest only repayment since we select on 5 years, and what would be the approximate principal and interest only repayment when the interest only period expires. So we can see here the year-on-year property market value, the estimated usable equity, and the year-on-year debt. So if we want to fast track, shorten our loan period, so we can just add whatever amount you want to add here. And it says here it will short adding a $300 per month on top of our monthly repayment will shorten the loan period by 4 years. So from 30 years down to 26 years. So we can see that in here. We just have to deactivate the estimated usable equity and disable the property market value so we can see what would be the effects. So the gray line is our regular debt of 30 years, and now the yellow line here, since we are adding $300 per month, this is now the new loan period, which is 26 years. Now we'll enable estimated usable equity and property market value. And it also says here, provided that the growth continue at the rate of 5.01%, then it's estimated that on 2040, the value of the property will double. So from 540 and on 2040, it will become $1.124 million. That would be the property's market value. Now we can also check the cash flow. So when we go down here, it will also show us when will the property be positive based on interest only and based on principal and interest repayment. So we'll just turn off the estimated cash flow on P&I. So now we can see here that the estimated cash flow, the property from year 2033 will be positive. So here it shows us that on 2023, the property will be positively geared, or the net cash flow will be $1,073. And if we factor principal and interest component, this is how it will look like. Because on the 5th year, it's less negative because we selected the 5 years interest only. But on the 6th year, we start to pay the principal component. So it becomes more negative and it will be positive again on 2045. So this gives us a confidence that the property we're buying will be positive cash flow after tax in the near future. And we can also see when will the property we're buying will double in value. All right, here's that bonus tip that I mentioned. Once you're happy with your numbers and results in the property analyzer, you don't have to manually plug in those figures in the dashboard filters. Instead, just click the View Suburbs icon. SuburbsFinder will automatically use your budget for property price, rental yield, vacancy rate, and compounded annual growth rate to instantly filter suburbs that match your requirements, saving you heaps of time and making suburb research laser targeted. Smart property investing starts with clarity, not chaos. Running the right numbers first saves time, prevents analysis paralysis, and gives you a clear strategy to move forward. The SuburbsFinder Property Analyzer tool helps you plan better, act smarter, and gives you the confidence to invest with purpose. Start analyzing today and take your first real step toward your next successful investment. And if you like this video, don't forget to hit that subscribe button. This is Gilbert, founder of SuburbsFinder. See you next time.